Alright, guys, so this is unthinkable. The US might have just crossed the line. And if you think that America and China, the decoupling will reverse, I think it's really time to think again. Over the last 3 years, the US has been hammering China relentlessly. Now, we have seen Biden issue brutal semiconductor curbs meant to limit China's technology progress. Then we had Trump issue not just one, but two 10% additional tariffs on Chinese goods. But what just happened takes the cake. It's crossing the red line. A US court has found China liable for the pandemic back in 2020, and as a result, the judge has imposed a $24 billion fine on the Chinese government. No, this is not a joke. This is a judgment call from the AG in Missouri, and now Chinese assets are on the line. They are at risk. Now, this video is not to investigate whether the judgment is right or wrong. I have no idea about the case, but the effects of the US reaching in to take Chinese money doesn't bode well for the future. I'm sure we're all having flashbacks to the start of the G7 sanctions. And what happened? They froze and eventually seized Russia's central bank reserves. And it started a deadly chain of events that accelerated the move towards a multipolar world. It also escalated the global dumping of US dollar assets. And the US Senator Eric Schmidt is now jumping for joy. He wants Missouri to seize China's assets and to show me the money, show him the money. And it goes without saying this is a very extremely risky move. China calls the lawsuit absurd and didn't show up. But as we all know, even if you are a sovereign country and you have assets trapped in the US, it can still be confiscated. Now just ask Putin, he knows all about it. Threatening to seize something is one thing, but can the US really make good on their collection? Well, apparently and dangerously enough, they can make it happen. They are really going after China. We intend to collect every penny by seizing Chinese-owned assets, including farmland in Missouri. In the grand scheme of things, $24 billion is a drop in the ocean to China. They have assets all over the world. This will just be a blip. China is an export giant that generates over $1 trillion in surplus every year, but it's still money that has productive use. And unfortunately for China, they do own quite a bit of farmland in the US state. Chinese entities own over 42,000 acres of farmland in the state, and this was done through a Hong Kong company buying over a US food producer back in 2013. So it was a commercial and private transaction. But with the US looking to punish China, does this mean the farmland will get confiscated? And now that we have Trump in the White House, seriously, anything goes. Even if this is just one state seizing Chinese assets, it's going to spook out both private investors in China and Beijing itself. The US can find us guilty for anything and they could take away our assets. That's going to be the the prevailing thought here. It really goes beyond just farmland adventures. In Q3 last year, China still held a huge amount of US debt, and these are dollar assets owned by the Chinese government. If we add in treasuries, agency bonds plus corporate debt, the amount is nearly $1 trillion worth. If Missouri goes ahead with the seizure, it would trigger a big outcry from Beijing. Now, I don't think China will counter seize US assets on Chinese soil. It would actually be very counterproductive and will frighten away other Western countries. Countries looking to relocate their factories to China will be afraid. And that just isn't smart when you're fighting an industrial war with the US. Chinese companies all over the US, they are facing pressure. Pharmaceutical manufacturers like China's WuXi are facing a potential ban from securing US government contracts. Now, the climate is one of decoupling and national security is also being weaponized. Slowly but surely, the door will close on Chinese investments into the United States. Companies will also get pushed out. And that's why Beijing is going to keep selling their stash of US bonds. There's simply no point holding them. You'll be a clown to fund your own economic containment. And the big winner here will be physical gold. Now, this chart is perhaps the most important one if you're a gold investor. Since Russia had their reserves taken away, China did a big pivot and started stockpiling gold like no tomorrow. And these are just the official figures Beijing wants us to know. It's very likely they are buying more. But we can see China increase their holdings by nearly 400 tons in just a few years. More importantly, their gold holdings have doubled from 3% of total forex reserves to 6% as they continue to sell off or roll off their treasury holdings. There's one outlet they will stash their proceeds in, and that's the gold market. And if you hold gold, this is very important to take note of because we now have a gigantic economy that is channeling a huge amount of money away from US assets and their trade surplus into bullion. And China's demand is no longer price sensitive. Securing their reserves is now an existential issue, especially when you're fighting an economic war. Despite record gold prices, China's central bank is still a buyer. Gold prices were well above $2,900 in February, and the PBOC still continued to accumulate. There's a lot of speculation why. Perhaps they are trying to front run the US Treasury in some sort of gold revaluation, or maybe China is plotting something with their own financial system. But let me offer a much simpler option. If you're China, would you rather buy gold at a higher price and lose 10 or even 20% if it collapses? Or would you rather lose up to 100% if your bond holdings get seized? If Russia could see the future, I bet you they would also pile everything into gold before February 2022. And this is why this seizure by Missouri is important to watch, because it tells us how safe a country's assets are in the United States. This chart from Goldman tells us everything that we need to know. Before the freezing of Russia's central bank assets, the buying of gold from central banks on the London Exchange was minimal, less than 20 tons a month. But after the freezing of Russia's reserves, demand from institutions flew to the moon. It more than quadrupled to 84 tons a month. Imagine global demand if the US seizes China's assets. Russia's economy is big, but it's still a fraction of the Chinese industrial machine. So no one is safe anymore. The US seizing China's assets, whether it's farmland or treasury bonds, will not bode well for the Western financial system. But speaking of retaliation, we have to touch on China's latest move on the US economy. On March 10, which was yesterday, China imposed their first set of tariffs hitting US farm exports. And unlike US tariffs, China is really selective about how they impose their punishments. They have a full grasp of their supply chains, which levers to pull and what's possible to weaponize without hurting their own economy. China's deploying food punishments as a high impact and low cost weapon in a trade war. And here's the important part: Beijing is raising their domestic grain output target and their budget for stockpiles. It's a clear sign that China's moving away from US food imports. They are mobilizing their own local farmers and stacking a ton of food just in case things gets rough. Now, why is China so confident when it comes to food imports? Well, it's because they have other alternatives in the world to source from. Chinese supply chains, unlike the US, are very well fleshed out. China has a very big presence in Latin America, which is also a breadbasket of the world. Now, take soybeans for example. Since 2020, Chinese imports of Brazilian soy have been rising, hitting over 10 million tons a month during peak periods. However, demand for US grain has been dropping, especially after 2024. The downtrend is very obvious and would probably never ever recover. What incentive is there for China to buy US grain? Even if prices are somehow cheaper, China still has the capacity to pay more to Brazil than help Trump out. And in this round of tariffs, China imposed up to 15% tax on US farm imports, including grains, proteins, cotton, and even fresh produce. Soybeans is the hardest hit at nearly $13 billion. Beef, pork, and seafood are other billion-dollar categories being targeted. As a whole, China is moving to cut away $22 billion worth of US food imports into their country. In no way can this be good news for US farmers who are already being squeezed by Trump. They can't buy cheap farming equipment from China. John Deere also has to reshore from Mexico back to the US. So the prices of new harvesters or tractors, they're gonna head up. And because farmers are seeing their margins get squeezed, the US government has no choice but to step in to help. Federal subsidies will continue to climb, and where is the money coming from? From deficit spending, of course. This is a burden to the taxpayer. The amount of money given to the farming industry is enormous. In 2024, the US government spent over $180 billion on corporate welfare, and the Department of Agriculture alone received nearly $45 billion of the total amount. It went to marketing support, payments to farmers, crop insurance, and utility subsidies. Now that demand from China is about to drop, farming revenues are going to take a hit, and that means Trump will need to borrow even more money to keep US farmers afloat. So, in a twisted way, thanks to his tariff war, China's retaliation is flipping the plan on his head. He will ironically have to increase government spending to help US farmers out. And this is the problem with Trump's trade war and his policies in general. He loves to focus on the first order effects. Yes, tariffs will most definitely cut down on the US trade deficit. No one is denying that. And yes, some production will come back home. But overall, it is bad for the economy. It will be extra bad for consumers because prices will rise as well. Trump just confirmed this in his State of the Union address. It's crazy.
Our new trade policy will also be great for the American farmer. I love the farmer. Who will now be selling into our home market, the USA, because nobody is going to be able to compete with you. Because there's goods that come in from other countries and companies, they're really in a bad position in so many different ways. They're uninspected. They may be very dirty and disgusting, and they come in and they pour in, and they hurt our American farmers. The tariffs will go on agricultural product coming into America, and our farmers starting on April 2nd.
So here's the deal. Trump moving to cut US imports of food sounds like he's protecting US farmers. Now that might be true. However, beware the second order effects. Farmers might face no competition, but that would mean higher prices for consumers. More inefficiencies and a higher cost of production is coming. And are you prepared for higher food inflation? Here's why Americans are getting poorer. Over the past 5 years, wages have grown by only 20%, but overall food inflation is at least 21%. And in some categories like butter, beef, and sugar, it's almost double the wage growth. Prices for eggs are insane, over 200% higher than 5 years back. Now imagine the fallout coming from China's retaliation and Trump's plan to block food imports. US farm produce will get much more expensive, and that will result in lower exports because prices will be uncompetitive versus other countries like Brazil. Meanwhile, US consumers will feel the pain at the grocery store. And if we want prices to come down, the trade war will have to end. But as it stands, the US president is living in an alternate universe, so don't count on it just yet. We probably need a total collapse of the economy and the markets to wake Trump up. But as always, let me know what you think. Will the US really reach in and seize Chinese assets? And what are the fate of US farmers? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.